All right, hello everyone, we are live. I'm starting seeing people coming in. We're going to be about a few more minutes just so that we have everyone here. In the meantime, Radu, how is your day?
Amazing, amazing. One of the better days of the world. Sunny. That's super cool.
Yeah, it definitely doesn't feel like winter in Romania because I feel like I'm cheating. I feel like we're going to pay for it a few months later, but that's fine for now. It's enjoyable.
One or another.
Yeah. All right, okay, so let's begin with the housekeeping items. That should give everyone a few more minutes to join in. So first, hello, hi all, thank you for joining. Thank you, Radu, for being here. This is the third edition of our Ask Me Anything with Sibling session, where our goal is to answer all your questions as much as possible. We are going to be here for 1 hour, and against my better judgment, I let Radu convince me to have no slides prepared for this one. So it's going to be we're going to wing it, but I'm sure that everyone has enough questions to fill out. I'm not worried about that. Before we begin, this webinar will be recorded, and we will be sending everyone that managed to join and everyone that hasn't been able to join the recording. So if you have to drop at any point, don't worry, you're going to see the whole presentation. And then, well, no, I think that's pretty much it. If you have any questions, please use the Q&A panel. That will make it easier for us to answer all of them in order. Today with us, we have Radu Georgescu. I'm fairly certain that he needs no introductions, but for the sake of having a starting point, Radu has over 30 years of experience in founding and developing companies. He's done software, e-commerce, internet. He had successful exits that include RAV Antivirus, which has been purchased by Microsoft, e-payment businesses, and some other huge names that I'm sure he will tell us more in a second. Currently, Radu is board of director and advisor to a number of startups and mature technology companies, which of course includes Sibling, if you ask me, the coolest one. Radu, again, thank you for joining and giving us some of your time. I'm going to pass it on to you to tell us a bit about yourself.
Thank you so much, Vlad. It's a pleasure being here. Thank you, everybody, for joining us today. So I guess I'm gonna just say a few words about myself, just about what I believe in the business kind of perspective. And I'm happy to answer like really any kind of questions that anybody might have. So the sooner you have questions, you drop them in the Q&A panel. We can start getting into the things that really interest you, not kind of in a potential speech of myself, right? Started. I'm a serial entrepreneur. Basically, I started 37 businesses. All in all, in the 30 years, and 6 of them really successful. As Vlad was saying, RAV Antivirus acquired by Microsoft, e-payment acquired by PayU, Naspers became PayU Global, Avangate acquired by Francisco Partners in Silicon Valley. Vector Watch acquired by Fitbit, quite a few. So 6 really successful. Then 10 of them didn't actually lose all the money, which is great. And then everything else, amazing experiences, amazing learning experiences. Very happy to learn from any failure. I love failures. Having said this, I love success more, and kind of that's where I'm coming from. Very focused on technology. Every time I tried to get out of technology, I failed dramatically. So 100% success in failing out of technology. I'm one of the guys that I can support by myself probably about 20 or 30 nights of fuck up night with things that I screwed up in my life. I think my main message probably to you as investors through Sibling today is about portfolio. So I do believe very strongly that investing in one company is a lottery ticket. Invest in one company is going to be successful or not. Nobody in the world can say for sure this company is successful or is not successful. I think that the way to do it, and the way I'm doing it basically is, and the way VCs are doing, is playing statistics and creating a thesis by yourself. So things that you believe in theory can be successful. So put together a set of characteristics that you believe makes a company successful. Like, what vertical the company is in, that you believe that vertical is kind of high P and successfully during the next 2, 3, 4, 5 years. What kind of founders does the company have? What kind of other investors does the company have? And so on. I mean, is it an early stage company or a later stage company? And so on, right? So put together a thesis and then start investing, statistically invest in 2, 3, 4, 5, 6, 10 companies around that thesis. And the thesis itself may be just diversification. I mean, have one technology company and one real estate company and one oil and gas, let's say, whatever kind of a company. But I do feel strongly that the portfolio, the more portfolio it is vis-a-vis one investment, and the more diversified the portfolio is, the better it is. And then you play numbers and you play statistics, and that's a big kind of a foundation brick. Then on top of this, to increase the statistical chances to win in a portfolio, is the fact that at the end of the day, we invest kind of early-ish, and then you double down in the companies that have been proven successful. So the follow-on right that you have negotiated in the contracts, in our case, that Sibling actually negotiates for you in the contract, to be able to follow on, to double down in companies that are successful already, increases for that companies the chances to be successful. So double down in successful companies. And that's one of the tricks that VCs know very well and know how to protect this follow-on right, because in the good companies, the founders and the new investors actually don't allow you to invest when they are already proven successful. So UiPath, to take an example, the moment they've been proven successful, tens and tens of VCs and the Ps tried to actually throw money to them, and they're like, no, you are not allowed to put money into such a big success, right? And people are literally begging to be able to write a check. Now, being able and having guaranteed the right to write a check in a successful company, it's something that's very good, and it's one of the tricks of the trade, right? So I guess that's kind of the general message that I'd like to discuss us today, of course, but we can go in any other directions. So I guess we already have a question.
Yeah. All right. Let me read that to you. So the question is around physical goods, and if you have any advice on this type of companies that are not selling a software, because that's overly discussed in the last years. But do you have any advice for types of companies to get success for physical goods, and also be appealing for Siblings investors? That would be a good point to touch.
Right. So the general feeling that I try to throw in is that at the end of the day, every entrepreneur should actually go and start a company that he believes in, and start in a business that he's comfortable in. More like, if you have a hobby, let's make money out of the hobby, right? If you play very well, create kind of a music company. If you cook well, create a restaurant or whatever around cooking company. I think that it's very important that the founder actually knows very well that that business. It doesn't matter whether it's a software or hardware or general goods or services or whatever, right? Now, coming to the second part of the question, which is this going to be appealing to sibling investors? I think rather not, because at the end of the day, sibling is showing and promoting, and sibling knows about, and sibling investors knows about technology. At the end of the day, when you are looking for an investor as an entrepreneur, you are not trying to spray and pray, kind of search for any investor and see which one invests, right? But rather look to speak to the investors that actually know your business. Now, sibling investors know the business of technology. And if you come with a general goods kind of business, sibling investors are just not well suited for you. They're going to look around and say, nah, I don't know this business. I don't know where it can go. I'm not going to touch it, right? So it's not that it's better or worse, is that they're really kind of not connected well. So sibling investors are people and investors that know technology. Okay.
Yeah, this is a classical case of knowing your audience, I think. All right, let's go to the next question from Corina, who says that investors are looking more and more to ESG of the company's startups, since this shows how well the company knows its risks and has internally managed them. How do you look, Radu? How do you look at the ESG rating, and how important is it for you as an investor?
There are so many things that are important, and there are so many different things that are important for different investors. The more institutional the investors, the more ESG is important, and the more angel the investor is, the more profitability probably is important. For me personally, ESG is part of the process. I wouldn't put it, number one. And if we go into this direction, what's important for me as an investor, I would look and say that the most important thing is the ability of the team to execute a business, right? I'm not looking at the vision. Yeah, vision is important. Vision is there, top three, but it's not the thing. I think that the most important thing to write a check, me personally, is the ability of the team to execute a business. So yeah, I guess kind of that's where we are.
All right, and I think that also answers our next questions about what is the most important thing when looking at MRR, ARR, idea, team, and clients. So in that case, your answer would be the team's ability to execute a business. Anything you want to add on that one?
Yeah, I guess that's the core kind of a thing, right? Yeah, absolutely. I think that yeah, you take a look at the vision, and it has to resonate with your own vision of life and everything, and it has to be in your thesis and in everything. I think 15, 20 years ago, we were in a technology world where he or she who has technology was God. We're not there anymore. I can't believe anybody telling me that, oh, we're going to build the technology. Trust me. Yeah, I trust you. I mean, anybody is going to build the technology or acquire the technology or rent the technology or whatever. Technology, it's easy to be built. But execution of the business, it's something that it's key. So yeah, I'm looking at signs, and each team has different signs to show a potential investor that they are able to execute a business. So some people have the history of the founders there to prove. Some other companies, startups, have already MRR or ARR or users or breaking even or whatever. So I'm trying to find clues whether the team is able to execute the technology or not.
All right, gotcha. You have answers the questions. Moving on to the next one. How do you see the sector breakdown into a sibling portfolio? How do you see percentage of sibling investments into the total investor portfolio consist of all other type of investments? So I think the question here, if I understand it correctly, is do we see diversification in sibling portfolios, and what's the distribution like there?
That's a very personal question. So I don't think there is a golden answer here. I even don't think there's a golden answer whether how much of your total investments should be in sibling. Kind of as a rule of thumb, I would suggest that people would treat their 100% their net wealth, their wealth, right, as a project, and try to understand how many and what types of investments there are there around, like cash, bonds, equity, traded equity, non-traded equity, funds, gold, whatever, right? And figure out the risks versus benefit of each of this kind of types and of investments. Try to figure out the global geopolitical, economical kind of environment, and each of those types of investments, where there are in a cycle. So you don't really want to invest on the top of a cycle, and figure out your own wealth. How do you kind of believe that has to be distributed? And figure out, you put 5% in this, 10% in this, 50% of this, 20% in this. Figure out and try to make this math, which is different for everybody. For each person, each person is different. And then when you go to equity, which is probably the most unstable, the most risky investment, equity, which is big risk, big potential reward, right? Then you get into, do you want to get equity in the companies that you participate, that you are active in, your own companies? You want to have equity traded on the stock exchange, which is more liquid, but much riskier. And do you want to get invested through sibling, for example, which is a little bit less liquid, but probably a little more stable?
All right. Okay, thank you. So when you do find a startup that you're interested in, what are the steps you take when doing the due diligence for deciding if you invest or not? And I know that this will be a cop-out answer because it is different for everyone. So maybe you can give us kind of a few things that you always do, or the things that you consider deal breakers.
Right, and I'm speaking on behalf of myself, not on behalf of Sibling.
Yeah,
right now,
definitely.
Right?
Yeah.
Absolutely. Yeah. So I look at three things in principle, and I'm going to kind of repeat myself, but I'm looking at three things. One is ability to execute, vision, and the chemistry, right? And I would put, if I have 100%, I'd put 80% to the ability to execute of the team's ability to execute the business, which means that team has to be complete, rounded, not only like 3 developers starting to develop to start a business. I mean, there has to be a business guy, there has to be a financial guy, and so on. Or knowledge, not necessarily somebody different, but there has to be knowledge in the team. Then 15% is about the vision, and the vision kind of matches the way I'm looking at the world, and I'm looking at where the world goes. And chemistry, which means that I have I mean, there has to be the same kind of values with a founding team, with the execution team. Have to be able to stay for one night in a boardroom and not, kill each other. have to be able to look at very tough questions and answer in the same way, about ethics, about ESG, and all this kind of soft things. So I guess that's what I'm doing, and I'm trying to figure out, to get glimpses and indications of where they stay, and try to figure out not what they are telling me, but what it is behind their words. Now, in principle, what investors are doing is investors are not investing in a picture, right? So they're not investing in what they find out today. Investors are investing in a movie, right? So they're trying to follow a company for a couple of months to understand what's happening and to figure out what's there. Now, once a in principle decision is made, then of course there's due diligence, where there are 4 types of due diligence maximum that I can think of. It's commercial, technical, financial, and legal. Now, sometimes the technical due diligence is not required. I mean, just to make sure that they didn't steal IP from somebody else or whatever. Commercial is, in principle, just understanding how they are going to go to market, that they know who their customer is, and they know how to execute the business part. And then the most known and risk protecting due diligences are the financial, so they don't have hidden costs and hidden liabilities, and legal, that the company is actually there. So yeah, that's kind of the most comprehensive thing. Now, the smaller the companies and the smaller the investment is, the less required all the due diligence there.
All right, I'm going to start quick firing those at you because we do have a lot of questions. So from your personal experience, what are the top most important factors that contribute to success or failure? Maybe top 3 for both from your experience.
I think the passion is probably the most underrated factor. So anytime you really see a founder that's passionate about that particular business, it's very important, because he's going to actually feel things. If founders, I've seen a lot of founders that are, I want to be an entrepreneur. What business should I get in? Should I get in software? Should I get in real estate because I'm an entrepreneur, right? But they don't really understand the soft things of that business. A passionate person in that particular field is going to actually have an extra feeling. They don't need to go to Gartner and ask for research. They're going to actually understand that business before anybody else. And I think that's important. So I guess my answer would be passion.
Okay, gotcha. All right, next one from Anna. So in relation to what you mentioned about the follow-up rounds, what are a few elements that you consider to be important to be set in stone at the initial round? So things that need to be negotiated at the initial round for follow-up rounds.
Right. So with respect to the follow-on round, the only thing is that you need to be able to automatically invest in the follow-on round if you want. So you have the right to follow pro rata, so to keep your percentage, right? I think that's the only thing. Otherwise, there is nothing else that you can actually say for the follow-on round, because it may not be, the company can go up or down. You cannot set prices. You cannot set other things. Basically, the only thing that you can set is this. And then that's about the follow-ons. There are obviously so many other conditions and articles that you want to put there to protect yourself as an investor in case of a downside, or in case of whatever, so many cases. Now that's a point where actually Sibling helps a lot, because Sibling is creating and discussing term sheets and shareholders agreement with the knowledge of a VC, and therefore creates all this, downside protection and upside protection for the future and so on.
Yeah, all right. And Anna, we do have quite a lot of resources on this one, what Sibling negotiates and what Sibling thinks should be negotiated. So if you're interested to go into more detail here, just drop me a line after the webinar and I can send you some resources. All right, on to the next one from Bogdan. Can you please detail what means to execute a business in order to get your check?
Yeah, I mean, now, no offense, and I'm just doing this, nothing personal. I'm just doing this for the show a bit. Asking this question is kind of guaranteeing that it's not getting the check, right? So execution of the business is basically it's kind of making sure that you and that the team is able to get that company to be successful. It's execution of the business means designing the product, creating the product, programming the product, understanding who the customer is, marketing, getting to the customer, getting to the right customer, signing contracts. I mean, just signing contract is a big skill. Signing the contracts, getting the money, delivering the product, selling more, understanding the business, and that's only on the commercial side. Making sure that the financial part is staying together and not doing, keeping up the corporate governance on the financial side, keeping the company financed, understanding that the company has the money up to that point and the money is going down or up, and how the finances goes. It's very easy to keep a company successful if there's a lot of money coming, but you need to be able to keep the company successful when there's a lot of money and where's little money, to navigate through the problems of life, to understand what the problems of that company are. So I guess that's kind of only part of what executing the business means. It's a lot. It's way harder than programming a software.
Yeah, all right, gotcha. Next one, this is a short and concise one from Bogdan. How do you define the current value of a company?
Yeah, the short answer is the value that somebody is willing to put money on. That's the value of the company. We're living in a horse trading kind of a market where the value of Apple is the value that Apple shares are being traded. The value of Tesla, we may agree or not agree or disagree or whatever with how much a company that does nothing. Okay, I'm not going to get into this, right? I mean, agree or disagree, but people are actually buying that shares with that money, so that's the value of the company. If we do have a company and somebody agrees to trade shares at that value, that's the value of the company. Now there are so many ways to calculate, the value of the company with the future incomes and net present value and so on and so forth. But all of those doesn't really matter when there's no deal and nobody wants to put money on. So yeah, the value of the company is the value that people want to trade their shares. And that by the way, that's the way Sibling is keeping in my portfolio. The value of the present value of the company is not a value computed by Sibling, is the last value that a deal happened in that company. And I think that's basically the fair way to think of.
Yeah. All right, Corina says she sees a lot of startups having business models that bring technology to solve climate or social problems. However, when it comes to investing, not many investors are interested. Do you think that generally investors need to know more about the current problems? Do you think it's a lack of knowledge issue and that's why investors are not interested? Or do you think it's something else?
Right. I think it's something else. I think it's a lack of understanding of the entrepreneurs to what investors to search for their money, right? As I was saying, each investor has their own thesis, and there are investors taking money that have to be directed only for profits. There are investors taking money that are to be directed for ESG. There are investors that have money that has to go into climate, into green energy, into this or that. And I think that, and combinations, obvious. And I think that the companies that have the focus on ESG have to take money from ESG investors. If you are, it's like in life. If you are asking for flowers from a computer shop, they cannot provide, even though it'd be nice. So the same if you are asking for ESG non-profit kind of money from a VC that is created to be for profit, it's kind of a mismatch. It's not good or bad, it's just a mismatch.
All right, okay. On to the next one. What is an approximate...
By the way, just to follow it here, Sibling, for example, has investors that are focused on this, and we did have a couple actually of companies that were ESG related, and one was, I'm very bad with names. One was the one with the eco bags to be recycled and so on. And there's one more that I don't really remember, but there are a couple of companies in Sibling that were financed with good investors towards ESG. So it's just a matter of matching the right investors with the right company.
Yeah, all right. What is the approximate success rate for Sibling or for you personally? Has it changed in the past couple of years? And I think this is a second question from the same person, from Cosmin. Are there more requests of investment now that in the past years, and how that influences your investment strategy? So I guess has your investment strategy changed in the last years?
Yeah, my personal investment strategy changes all the time. So I'm trying to figure out and be to understand and be very very present in the real life and understand and change my vision of the world and what the successful companies might be. And I may be completely wrong, but that's what I believe in. That's where I put my money in. My success rate, I was saying, it's out of the number of companies. So out of 37, 6 successes and 10 didn't lose the money. In all, because I'm an active investor and therefore I invest very early and put a lot of sweat equity. My multiple of invested capital, it's amazing. It's huge. It's not the multiple of a VC. So a normal VC would be very happy with 3, 4, 5 times invested invested capital multiple. I'm somewhere around 80 times money, but that's because I put in a lot of sweat equity, right? So it's unfair. It's not a comparison. Yeah. But I'm happy. I'm happy. I do what I like, and I'm happy with the results.
All right. What tools besides Sibling do you use or recommend for managing the portfolio?
I'd say Excel is best tool ever. So knowing how to do the arithmetics of managing the cap tables, Excel, it's perfect. There are quite a few tools, but I don't know any tool that is, other than Sibling, that is dedicated to personal investments. There are tools like Dynamo Software and so on that are dedicated to VCs, but they're damn expensive, and they're created to be used by teams, and they're big tools, very very heavy tools. As an angel investor, as a small family office, I honestly don't know if anybody knows such a tool. I'll be happy to learn about them. I think Sibling is one of the very few, and right now it's only dealing with inside Sibling investments. There are some plans for the future. I don't think I'm allowed to disclose right now, but hopefully it's going to go somewhere.
Okay, we have kind of a great question here. What do you think of the metaverse?
Oh man.
Maybe let's phrase it in the perspective of one investor, and not what do you think about the metaverse, as in would you use it? Because I think I know the answer to that one.
Yeah. Look, I'm old enough to have been playing Second Life 15 or 20 years ago, and at that time it was quite an amazing experience and idea and mind-boggling thoughts that went through everybody's mind. It was way ahead their time and everything. I don't know. The metaverse and the Web 3.0 with the metaverse and blockchain, the two kind of two new-ish things. I guess they're here to stay. What are the actual use cases? I don't really know. Look, blockchain is here since 2009, so it's for 13 years. And last year, NFTs were the actually first real use case for smart contracts. We have to wait and see if blockchain and metaverse in the same time are great technologies in search for a use case, for a problem to solve. Are they going to actually find that problem to solve?
Okay, we are seeing a raise in pre-money valuation, seed, Series A, etc. What is your opinion on this? Is it normal? Is it sustainable?
I don't know. There's a lot of money in the market right now, and that's the obvious effect. Technology is booming. People working from home, and less and less people working, with the hands in the factories, and more people working from home, computers, robots, and so on. So that's a huge requirement for technologies. So I guess valuations in the technology business are growing. How much, until when, I have no clue. I don't have a crystal globe on that. But yeah, the combination that there's a lot of money in the market, and B, there's a huge demand for technology companies. That's a deadly combination for valuations.
Okay, gotcha. Anka asks, is Sibling interested in listing foreign startup as well, or Romanian only?
No, absolutely. Sibling it's already listing for foreign companies. So Sibling Vision is to be European, to be completely, obviously Romania, it's home market, but to be pan-European, both on companies listed as well as investors. And Sibling started, the office in Bulgaria. These days, it's starting the office in Bulgaria these days, the office in Greece, And so starting and actually making sure that it's the most visible and active tool, investment tool in this part of the world. And slowly, through partnerships, through corp dev, biz dev kind of tools, to become a completely pan-European company. Actually, today we just listed an Italian company on the platform. So. And it is, if I remember correctly, there's also a Greek company still open. The listing is still open. So look, out of 4 companies, if I remember correctly, there are 2 Romanian and 1 Greek and 1 Italian. So yeah, it's still a Romania plus. I mean, most of the companies and investors are Romanian, but it's actually growing into that direction very quickly.
Which is why we're speaking in English right now. We do have
Yeah.
a lot of joinees from outside Romania, and that number is growing.
Yep.
All right, on to the next one. Can you give us some advice on how to start a career in venture capital from the perspective of an economics university student? So right from the get-go.
Yeah, that's kind of a harsh job. It's so VC. So being employed in a VC, it's a very hard job to start with. It's not really. It's not as fun as it sounds. It sounds funny because you're the guy that is kind of throwing money left and right. You decide what company is going to get money, and that's apparent. But it's a very, very, very hard business to be in. To get into venture capital as a young of the college, you get to be an analyst, and then you get to be a senior analyst, and then move forward. It's probably about 15 years, a minimum, to become a partner, and the only moment when you start getting money is you are a partner in a successful VC, and one of your investments was UiPath, and then 10 years later you get the carry. So the paycheck of a VC employee getting partner, so the real pay time, the happy time, woo, happy, it's late, and the percentage of happy VC GPs, partners, it's not like everybody is getting there. It's like with the companies, everybody's looking at Facebook. Wow, I want to be an entrepreneur. I want to be Mark Zuckerberg. But for one Facebook, there are so many millions of failed companies. So it's more or less the same.
So maybe start learning code.
Look.
All right, on to the next one. This is a long one, so buckle up. Dan has a startup in a domain in which he has 15 years of experience. He's the only founder of the SME. He doesn't have any founders or team. He has some proof of concepts that are working and a few potential customers, but no sales yet. Does he need to prove that he can execute with a team of co-founders, or is it enough to prove that he alone can execute first before scouting for investors to support the business with capital? So how important is it to have an actual team of co-founders in a startup?
Right. It's a very fluid. So the answer is a very fluid answer, and it's no 100% one way or the other way. I always prefer a team. I believe that a one person as capable and as all around the person might be, a one person team, it's less than an actual team, right? Being alone and running alone, you run slower than if you run, in a team. I personally prefer teams. That's not to say that if you are alone and you have a good business, you cannot raise the money. I would complete this with what I said before. I think the investors prefer to invest in movies, not in pictures. So investors prefer to look at you as an entrepreneur, as a company, in the dynamics of a 6 month or of a year. So I think that speaking with investors from day one of the company is way better than doing things in your room there, whatever, until you are perfect, and then ta-da, show yourself to the VCs. The learnings that you get from VCs, the experiences, the fact that they know about you and they know what you promised 6 months ago and then figure out today that you delivered, that's actually the best clue that you can execute, that you know what to promise and you execute to your promise. So I think that the situation that you described is go discuss with VC, with potential investors, whatever VCs, angels, and so on. Go discuss with investors and see what the feeling is. Learn from them and adapt your product. Go discuss with customers and adapt your product to the customers. Maybe in the meanwhile, you figure out that you need somebody, that you find somebody, and take it from there.
Okay. How do you see Romania as a source of potential successful startups, successful technology startups coming compared to other countries from our region? Do we have any advantages, any disadvantages?
Yep. I mean, obviously, look, there's Bitdefender, there's UiPath, now there's FlowX, there's FintechOS, there's FlowX. 20 years ago there was Rav and company that got sold to Adobe. Romania is obviously, and that's not an opinion, that's a fact. It's avant-garde. Romania is obviously the pinnacle of the region. I mean, they're the biggest success in Bulgaria is $500,000 company sold, right? Telerik, right? So that was everybody in Bulgaria. It's happy about that, and it's a great company, and the founders are amazing, and it created so much emotion and environment and everything in there, right? But Romania, it's actually created unicorn and decacorn and so many other almost unicorns around, and we're probably going to see Bitdefender listed in the next month or so, and see what's there, and all the mafia around those companies, all the knowledge that those companies brought in is so great. And the answer is yes, Romania has this opportunity. Having said, and that's all around knowledge and networking and all this kind of effect, right? Having said this, each of the countries around is amazing in its own way, and each of the companies have their own successes, and each of the companies have their own the countries have their own potential. Coming back to Bulgaria, Dronamics, that was listed on Sibling in December, that is absolutely an amazing technology company that has to do with drones. So that's where the technology is, but actually changed the business model in a way that it blew my mind. I mean, they're looking for drones into not into last mile, but into the middle mile. So I guess all the countries around are having huge opportunities to invest and to find great companies.
All right, the next one is about follow-on rounds from David. So he thinks funding platforms are very useful, but can mean less control or choice of the investors. That can be a cap table challenge as you scale, and particularly if you flip a structure to UK, for example. How is Sibling sensitive to this to help funders with later rounds and international scaling?
Yeah, that's the fun part. So Sibling is not it's not an equity crowdfunding platform for so many reasons. So normally equity crowdfunding are across verticals. So equity crowdfunding, it's a matter of investing in more companies. So they list on their platforms, technology, restaurants, and so on, right? We're only focused on technology, and therefore, with the risk of listing less companies than others, right? Because it's only technology, we are able to actually create very specific knowledge to be able to help that companies. And that's through Sibling's investors, because the investors are specialized investors, are investors that are willing to actually help the companies that they invest in. And through Sibling's partners and Sibling partners, like the partnership, the Sibling team. So through Sibling team, Sibling is able to actually behave as a VC, right? And there's a customer success team that is in contact every day, not every day, literally every day, but it's in continuous contact with the companies to understand how we can help the companies. Can we help the companies with people, with sales teams? Can we help the companies with a little bit of strategic advice? Can we help the companies with introductions, with networking? Can we help the companies with introducing, to the next level VCs, to Series A VCs, or to Series B, or to the next level? Can we can actually organize and syndicate rounds. So the answer is yes. Sibling it's a different animal than an equity crowdfunding animal, and is able to get involved actively in startups that need our help directly through Sibling or through the investors in that specific company.
All right, gotcha. This one is kind of a personal one. What was your lowest point in the entrepreneurial career, and what have you done to put yourself back on track?
Look, I'm a very lucky person, and I'm a very happy person, and I'm lucky, like in the sense that I know I have luck. Actually, in my professional CV, one of my professional skills is luck, and that's kind of very good to be able to acknowledge that. I'm a lucky person, and my low moments are easy to handle. I mean, I pulled the plug of that specific company, and move on. 37 startups that I funded. It's a big number in 30 years. It's quite a big number. So you may imagine that quite a few of them were rather quickly abandoned, and that's my way to figure out, that was a bad idea, and bad idea. Move on, learn the lesson, and figure out the next. It's super cool. It's super cool. I can give, actually, somewhere at 7:30, I think, today, or 7 o'clock. I'll actually be at Fuck Up Nights later today, and I'm gonna share, I think, 2 or 3 or 4 fuck ups that I've done into this direction. And if that's of any interest of you, please join there.
All right, so 4 more fuck ups to be continued later tonight. In the meantime, Radu, is there any educational program in Europe you would recommend for learning investments and how to become a professional investor?
There are three. So the best three programs for investors, as well as for entrepreneurs that are searching investors, are two in the US, one in Europe. They're damn expensive though. One is, I'm going to start, from far to close. One is at Berkeley. It's the PEVC education program at Berkeley, something. That is very technological, very VC oriented, very Silicon Valley oriented. Closer to home is at Harvard. There's again a PEVC program. It's I'd say it's more PE than VC. It's more investments than tech VC, and it's more kind of East Coast, like New York type of investments. In Europe, there's INSEAD that has again a PE-VC program at INSEAD, and these are basically in Paris and Singapore. Funny enough, that is more financial kind of oriented. So it's kind of less strategic and entrepreneurial, and more financial and number crunching. So in my experience, these are the three programs that are being, and they're, each of them, they're kind of a 1 week executive, 1 week, 20 hours a day thing. So yeah, I think these are the three. They're rather expensive, so they're like $15,000, $20,000, $25,000 a week, 1 week.
Yeah, and I would add to that, and this is definitely not a replacement for a professional program, but if you're interested to kind of learn more about entering the world of investments, but don't want to dedicate full resources yet, we do have a lot of resources, and we offer a lot of resources for learning, and we do have even a kind of a bigger program coming up this year. So that can be, and not just sibling materials, of course, but searching for materials by yourself can be kind of a good bridge to making that commitment, I would say. All right, next one. I think we have time for 1 or 2 more questions tops. There are still questions coming in. I doubt we'll be able to answer all of them live, but I will count Radu to help me answer all of them after the meeting. So we will do our best to try and answer all of them via email. But let's take 1 or 2 more really fast before we wrap this up. The first one is, how do you know when the upside part of the cycle of development of a company is finished? The example the person gives here is UiPath, which after the IPO started going downhill. Now, I don't necessarily agree with that example, but when do you know when a company kind of reached peak and will start to go downhill?
It's kind of a self-fulfilling prophecy. So it's not written in stone that the company reached the top of the hill and from now it's going to go down. It's a matter of the company is here now, and depending on what you are doing, it's going to go up or down. And there's a lot of theories about the cycles of the companies. And normally, one of the theories says that the companies have to be in constant pressure and in constant discomfort to be able to kind of move. And it's not a negative discomfort. And that's the magic of a CEO, to keep the company in discomfort, but in a positive discomfort, to continue to grow to the next stage. And what changes has to be done and everything. So in this kind of a, you imagine this kind of a step thing, there's the previous position of the companies, and then it grows, and you made the change, and the company grows, and it's comfort, and it grows, and it fights, and it grows, and it grows, it grows, it grows, and then right before the horizon, before the success, the perceived success of the company, it's the moment where you have to make a change, either to change, the CEO, to change the product setup, or to change the shareholders, or to make a solid change. If you don't make this change, the company is going to get to the success plateau, and it can become complacent and feel successful and comfortable. Now, in that moment, if you don't really do the change, it's not going to go on the next stage. It's going to start going slowly down. So coming back to your question, it's not predefined, written in stone by God or somebody, that the company has got to the peak and from now on is going down. The company got to somewhere, and this is the peak if you do some things, and it's not the peak if you do some other things.
Gotcha. All right. And then now the last one, just to kind of give everyone some homework for next time. Can you recommend a book about investing in startups?
Oh, there are so many books. There are so many books. I wouldn't venture to recommend one or the other. I wouldn't venture to recommend. There's so much literature, and each of them it's with different perspectives, and they're all important and all nice. I'm gonna sorry, I really want to take one more if that's okay with you, but
yeah, definitely.
The question is, when is the best time to sell a company, right? And the answer, it's a very short answer, is when you have an offer. And I really wanted to end with this note.
All right. Okay, that's good. Well, we will have to drop. I apologize to everyone. We still have a few questions that weren't answered. Again, as mentioned, we will handle them. I did my best to walk Radu through as many questions as possible. Radu, I'm sorry, but we might have to book you for part 2, seeing as everyone enjoyed this. I do hope that this was useful. Thanks a lot for your time, Radu, and everyone joining, and have a great day. And remember, you can continue with Radu tonight at Fuck Up Night.
Thank you so much. Thank you, everybody. It's been a pleasure being here. Great questions. Literally look forward to one more, actually.